Yo, what is going on, you guys? Welcome back to the channel. Hope all you guys are having a wonderful day. Today we're going to jump into a market trading recap where I made $600 in 20 minutes. And I make these trading recaps to help you guys, bring you guys into the world of trading. This is a tool, this is a skill set that all the rich people do. All your money in your 401ks, your Roth IRAs, what do you think the banks do with it? Just look at it, think it looks pretty? No, they invest it. They move it for you because you don't know how to. And I often see that as unfair because we should know how to invest our money. We should know how to grow our money and make it into more. So I try to do my best to close the gap in the knowledge barrier, in the educational barrier, the experience barrier. So all of my troubles, everything that I went through, losing money, as you guys see, I lose 1.6K, lost 5,000. I've lost thousands of dollars trading. I try to help you guys avoid these lessons. And I'm very transparent, you know, I share with you guys my wins and with my losses, my thought processes, what I think I could have done better, my mistakes. Why? Because it's a lonely journey, bro. You endeavoring on this, your friends probably can't relate to you. They don't know how to teach. They don't know how to explain it to you. Your family members, for the majority of us, don't know how to navigate the stock market, how to even place a trade, understand a chart. Teachers, college education classes, not really too much touching on this to my knowledge. You know, when I was taking general ed and pushing towards a finance major, macroeconomics was never talking about technical analysis. So it's a unique education, a unique kind of hard to understand. At first, it's just intimidating. It's not as hard as it looks. It just takes a little bit of getting used to. But this education, it's pretty rare and hard to find, so I try to mass spread it, share it, because it deserves to be. This is a tool that helped change my life, and I truly do believe that I can help change yours. So I want to make these videos to kind of help you guys, and let's go ahead and kind of jump into it. Hope you guys learned a thing or two. If you guys like this kind of content, please leave a like and subscribe. I appreciate all of you guys taking the time to watch the video and, you know, supporting me on this journey. It's just really charity work, you know. I want to be able to help people the way I was never helped. So today this trade is covering May 29th, and we took this trade on a kind of a pullback. You notice at the beginning of the market, Microsoft jumped up very aggressively off a 432 market open to a high of $448 in the first 9 minutes of market open. This is a significant move in the volume towards the upside. So we have a lot of share value increasing in such a short amount of time. A lot of share value in a short amount of time oftentimes results in some sort of selling off, kind of not a massive sell-off, but people taking profits because the move happened in such a short amount of time. Billions, if not multiple billions of dollars get exchanged in these quick bursts. So you as a trader, right? I missed this opportunity on the upside. It jumped up aggressively, very parabolic, you know, straight verticals. There wasn't a lot of selling going against this. Everything was just aggressively bought. So I miss these moves, but I'm aware with my experience, every time there's an aggressive sell or a push towards the upside like this, there's always some sort of a pullback. There is always some sort of a pullback. And this kind of begins to shape your understanding of how to maybe sit out on some opportunities. You know, some people, when they see a big green candle like this, aggressive buying, they jump to wanting to jump in there. Hey, it's going up, it's going up, it's going to the moon, everyone buy. And you run into this psychology of kind of FOMO, fear of missing out. And people be like, oh, damn, I missed this opportunity, and sometimes get discouraged from wanting to stay behind the charts to find another one because they missed one. That's not how you want to wire your mind to think. When there's aggressive buying, for the most part, after, there's going to be some sort of aggressive selling. So there's an opportunity there for you, but you got to time it correctly to get it. And this one, I'm not going to say my timing was perfect, right? But we did kind of take the trade off of a little bit of some data here. So let's jump into why I'm even trading Microsoft, right? Going back to the basics. Microsoft, I noticed, broke out of this consolidation. If I go to a bigger time frame, you're going to notice here. Look at this range that she was holding from 428 down to 410. She held this for a little bit over almost a week. And finally broke above this resistance level of 420 and started ramping up very aggressively. So we had 1 day of green, 2 days of green, pre-market before I entered this trade, aggressively jumping up. Look at here, 432 all the way to a high of 439, almost at basically market open. So once I noticed this aggressive buying, I was like, hey, Microsoft is catching this momentum. Let's see if we could catch something towards the downside. So I waited for this overbought scenario to present itself, and I want to go ahead and enlarge this because this is what I see. When I'm trading on the 1 minute candle, it's something you guys got to take into consideration too. This price move here from 432 all the way to a top of 436.67, that happened in 1 minute. That's 60 seconds. And in trading options, right, 0 day expiration or same day expiration or day trades, as some of you guys might popularly know them, a trade that happens here in Pacific Standard Time, it's 6:30 a.m. to 1 p.m. So a trade that happens in the same trading day, a move like this in just 1 minute can generate you over a 60-70% return if you can catch it correctly. You know, when I trade, this is how my charts look. And large, powerful green candles. So I'm like, okay, we're catching a strong bid right here. Buyers are very aggressive. Once I noticed the aggressive pattern, my mind immediately switched to, when is this going to sell off? Where is it going to be the little split pullback? And with these trades, it's kind of dangerous. It's not easy. It could go south sometimes because sometimes there's little pullbacks. What can mess you up here is being greedy, wanting too much, or expecting this bigger move towards the downside. So you have to be very frugal, very not thankful, right? I feel like that's the wrong word. I feel like you have to be I don't want to say realistic. I think the word here to properly be used is just kind of like quick. You know, you want to be out. If you catch 30-40% on a drawdown, take it off the table because you don't know if buyers are going to come up. And that's where I oftentimes, you know, I have ran into it as well, vast majority of times in my career. And we'll jump into it once we kind of run into it. I'll get over to that concept right now so you guys can understand it a bit better. So once we notice this aggressive buying, boom, 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 look at, we started catching some resistance here at this 440.72, 440.75 level. All this rejecting, down, 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 that's rejecting. So that means that around this level, there is sellers. Pretty shitty writing, but there's a lot of sellers in this level here. So that means that we have a point of resistance. Now, am I kind of entering here, expecting this to come all the way down? Absolutely not. But at this resistance, after noticing her hit, let's look at 1, 2, 3, 4, 5, 6, 7 minutes, and her ripping finally above at this resistance. Once I noticed this sell off right here, this sell in this candle, I entered. I started the position and I didn't go as heavy. I only entered around like 4 contracts. You got to fade into your positions, you know, never allocate all of your capital, you know, kind of take it easy, test the waters before putting all your eggs in one basket in case you need to average down, which is what I did have to do. You'll see it. Once you broke above this resistance, she continued and went all the way to 43.54. So once I seen her break above this resistance, I seen that she kind of rejected here again. And I was like, all right, maybe I missed my entry. I'm gonna add some more contracts. And yet again, I added more. And right here, I was negative on this position, roughly maybe like 20%. Once we pushed up here and I averaged down, I was able to reduce that down to like a negative 15%, something more tolerable. But I was saved here and felt confident to hold this trade because around 443.54, we seen some exhaustion. And I began to notice and compare this to previous levels. Look, there was no previous levels to kind of look back at. This was the highest we had been in a little over the last, whole month, really. So I knew at this level around here, 443, we had sold off previously in a pre-market move or after our move, but I'm not looking for too much here. You know, I seen it begin to sell off. Let's jump back to this chart. I seen it begin to sell off right here, and this is where I began to break down my exit. So how would I set my levels here? We have a supply down here. We have a support. Remember, support's the opposite of resistance. So you'll see price hit, come up, price hit, came up, price hit, come up. So we broke above support, broke above resistance. Now we're in unknown territory, right? So as I know, we reached this first buy up. And it's really important you guys understand this right here. As we reach this first buy up here, I'm going to clear the chart right here. Look at the buying strength here. Buying strength was very aggressive here once. And once again, 3 times after selling. And then the third and final time right here. I want you guys to think about this like working out. These are billions, millions of dollars being exchanged here to move the share price this aggressively. So with that being said, think about it like you throwing on the heaviest weight at the gym. You're going to do it very good, clean presses the first time, get your good reps in. Your second time, you're going to do it just as well. But third, fourth time, you're going to start getting a little bit tired, a little bit fatigued, right? Same kind of psychology or same kind of concept happens with buying in the stock market. When there's aggressive buying, buyers get fatigued. Sellers step in and the ratios switch for just a short amount of time. So I noticed when I was in this position, that same pattern, that aggressive, let's go back just to keep this example here, this aggressive buy, this aggressive buy, this aggressive buy. So I'm like, okay, buyers have to fatigue despite, you know, not even just what happened today, but also what happened in after hours, what happened in pre-market, what happened the day before. Microsoft has been absolutely non-stop. The selling off has to happen here. So I was like, okay, let's go ahead and bring back this entry here so you guys can see how we navigated holding through this position. So I did take a little bit of a drawdown after the second entry, but as I see we begin to reject, we seem to break back below into the previous range over here. A range is just where points consolidated at, where you had support, resistance, support, resistance, support, resistance. Price just bing, 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 bounced up and down off of. It didn't break out. So once we got a breakout and we came back down into this range, I felt way more confident. And now where was I going to be looking to take my exit? How do I know when to get out, Jerry? Well, for the vast majority of times, you want to get out where previous buying or selling was happening. So buying was here. Look at this. Support level. What happened at this level? Price hit, came up. Price hit, came up. Price hit, came up. So what do I think is going to happen this time around? Am I going to be the guy that wants to take the gamble and find out if it doesn't happen this time? Absolutely not. History already showed me what happens around this level. I'm going to take that lesson. I'm going to take that piece of advice. So when we hit the support level, I'm out of the position. And that did go ahead and close for, let's go ahead and review the gain here. I closed that position for a 80% gain, 80.32% gain right there. And that was $608. Let's go ahead and break this to you guys here. The buy was at 7 a.m. initial buy. You guys see that? 7 a.m. right there. And then the sell was right here at 7:21 a.m. So in 21 minutes, we made $600. And that's the breakdown. That's how I was able to analyze the market and view it through this lens to create that generous return. And this is another important concept here that I want you guys to understand. This is the learning part. All these squiggly lines, all these boxes, all this that you see here, that didn't come with my first week, second week, third week of trading. That came with years to view and understand price action like that actively during markets. And it's okay if you guys don't understand the market like this in your first couple weeks or months. Surround yourself with this environment. Get involved in a community. Join a Discord. You know, even if you have to join, you know, our paid group membership here at SoCal Trading Group. Get involved with knowledgeable individuals that are in this space so you can relate, get more comfortable, get more experience, get more knowledge, get more familiarity with this, right? Watch these YouTube videos, watch other YouTube videos. You know, I hope my content's able to make everything simple and digestible and easy for you guys to understand. I do my best to kind of keep it that way, but participate in these markets because to create 600% return, that initial investment for me was a total cost of $757. So I risked $757 in total to make a gross of $1,365 but a net profit of $608. So I'm putting $700 behind my trades. For some people, that's like, yo, what? $700? That's a lot of money. How do I want to do that? And it's a little bit uncomfortable. I don't recommend you as a beginner to go throwing around $300, $400, $500 just because you got them. Remember, your experience and knowledge is down here. The goal and the money is way up here. You have to build your experience and knowledge up there to be more confident in putting that much capital in a trade. You know, this came to me with years of experience, and this is why I run into beginners oftentimes struggling to be successful in trading, because they just want the money. And when they hear you got to put more money to make more money, they go and do it, but then they lose. And when they lose, they get discouraged, and then they don't want to trade no more. So balance out, bro. You're in a marathon, not a race, brother. And it's a good game. Every single day the markets are going to open. Doesn't matter if this isn't making you rich right now. If you could perfect your timing, perfect your technical analysis, and build your own understanding of the stock market, you will succeed and you will find exactly what you're looking for. So I hope you guys enjoyed this video. Thank you guys for watching. I don't want to make it too long here, but I appreciate all the support on the channel. If you guys like content and videos like this, leave a like and subscribe. If you guys have any questions, comment down below or text my phone number at 909-695-6336. I'd love to help as many of you guys as I possibly can. Thank you guys for watching. Jerry Trades with SoCal Trading Group, over and out.